Welcome everyone to the Alphawave's full year results. Thank you all for joining us today. We will take Q&A at the end of the call. We will moderate the Q&A. You may either ask questions by using the reactions button on Zoom and raise a hand, and I will unmute and introduce you, or you can ask questions using the Q&A function and submit a written question. On the call today will be our co-founder, President and CEO, Tony Pialis, and our Chief Operating Officer and Financial Officer, Rahul Mathur.
Thank you very much.
If I can just go on to the forward-looking statement. Just as a bit of housekeeping, I must remind everyone that today's briefing and some of the answers to your questions may contain forward-looking statements. These statements reflect management's current views, and there are risks associated with them. You can find a full explanation of these risks on slide 2 of the results presentation. The full report and slides, as well as recording of this call, will also be available on our website shortly after the call concludes. With that, let me hand over to Tony and Rahul.
Thank you very much, Graham. Hello, everyone. It's great to be here with you today. I'm Tony Pialis, co-founder and CEO of Alphawave Semi. I'm delighted to discuss the remarkable accomplishments we've achieved in 2024 to strengthen Alphawave Semi and advance our core business. Before we begin, I want to clarify that I will not be commenting on the announcement released by Qualcomm on April 1st, nor will I be able to address any potential M&A activity involved the company. The UK Takeover Code, which governs us and our communications with investors, analysts, and the broader market, are heavily regulated. If it is appropriate for us to share updates, we will do so via stock exchange release. Now, let's dive in. We are the world's leader in delivering high-performance connectivity and compute solutions. Our innovations power the industry in the realms of AI and data center. How do we accomplish this? We provide silicon IP that enables data centers to implement world-leading interconnectivity in their hardware. We design and manufacture chiplets, which are function-specific blocks for large advanced SoCs. We develop and produce custom silicon tailored to meet our customer-specific needs. Additionally, we create our own connectivity products. For instance, last month, we announced advanced PAM4 and coherent light DSPs that enable hyperscale campuses to achieve transmission bandwidths of up to 1.6 terabytes and transmission distances of up to 20 kilometers. Before I go into this, let me walk you through a little bit of our history. We were founded in 2017 as a pure-play silicon IP company, very much like ARM, before taking the company public in 2021. We've since evolved into a semiconductor company, adding custom silicon, connectivity products, and chiplets. Here we stand today in 2025 at the cusp of delivering a semiconductor company that's powering the next generation of AI. Next, let's look at our key performance indicators over the years. I feel a great sense of pride in our organization's consistent and reliable performance over the past 8 years. Our cumulative bookings surpassed 1.3 billion last year, with bookings reaching 516 million, 34% higher than last year. Excluding the legacy Open5 business and WiseWave licensing revenue, our revenue grew 82% year on year. More amazingly, excluding China, our revenue grew 93% year on year, driven by high-quality North American-centric AI and data center customers. Additionally, we've expanded our workforce with nearly 1,000 employees at the end of 2024. I understand that, as Tom Callahan from NASDAQ mentioned, there's currently a lot of chaos reigning that's causing many to hesitate. Therefore, I believe it's crucial to highlight the steps we've taken in the past year to strengthen our business and our sales channels. Firstly, we have significantly diversified our operations outside of China to replace the legacy business from Open5 and the WiseWave agreement. We are now establishing a new core business focused on AI and data centers, which positions us well as we approach 2025. From an innovation standpoint, we've continued to invest in research and development. This investment allows us to deliver the high-performance connectivity essential for AI and data center. Intellectual property is foundational in the semiconductor industry. As we near the fabrication limits for advanced processors, system-on-chips are increasingly being constructed from foundational building blocks known as chiplets. We are at the forefront of the chiplet development, not only innovating, but also implementing these technologies. For instance, in November, we announced a design win with the AI company Rebellions. Our custom silicon business has transformed into a higher margin enterprise that now integrates our industry-leading silicon IP, utilizing cutting-edge technologies from major players, including ARM, to drive the next generation of AI products. Our connectivity products are being deployed in the fastest optoelectronics and active cabling solutions, forming the backbone of our next generation AI fabrics. These solutions can deliver up to 1.6 terabits of bandwidth within a rack and over distances of up to 20 kilometers. We will delve deeper into how these advancements enhance Alphawave Semiconductor moving forward. However, before addressing the broader industry landscape, I want to emphasize our fortified sales channels. As we announced in February, we established partnerships with Siemens EDA to supply our IP through their sales network, significantly increasing our reach. Now, let's review how data generation has increased in recent years. Many of you remember Eric Schmidt, the former CEO of Google, who in 2010 stated that a total of 5 exabytes of data was generated from the dawn of time until 2003. Remarkably, that same amount is now produced every 2 days. Since then, data creation has accelerated significantly, with 2017 marking a key inflection point when machines began generating more data than humans. We've now entered an era of exponential data growth. By 2025, it is expected that 5 exabytes will be generated every 0.9 seconds. Furthermore, over the next decade, data is projected to increase 15-fold, reaching over 2,000 zettabytes. This creates significant issues that we'll delve into on the next slide. The hardware performance measured in flops has advanced at a much faster rate than interconnects, specifically at twice the rate. As a result, connectivity has become the bottleneck that limits processing capabilities within our data centers. The graphs presented by Meta illustrate this problem. On the left, you can see data related to the company's advanced large language models were up to 57% of the time spent within a data center is wasted, merely due to the data transfer between processors across the network. This is like being stuck in traffic for 57% of your workday. Given these challenges, let's look at the problems hyperscalers face when deploying AI at scale. On to slide 9. So to move forward, on to the next slide, I believe. Yeah, slide 9. Yeah. So to move forward, it is essential to deploy vast amounts of computing power and leverage artificial intelligence to analyze and manage the immense amounts of data generated. A prime example of the effective collaboration between computing power and AI in handling significant data volumes is ChatGPT. Only just a few months ago, ChatGPT evolved from version 3.5 to 4.0, training on nearly 2 trillion parameters. This required substantial additional hardware. When tested against the LSAT, it improved its performance from the 37th percentile to the 90th percentile, showcasing the formidable potential of AI when paired with large data sets. As a result, data centers are expanding rapidly. Where we once referred to hyperscalers, we now talk about entire campuses. These facilities require not only large data pipelines, but also the capability to data over extensive distances between servers, between buildings, and sometimes spanning several kilometers throughout the campuses. So how do we address these issues? How do we scale the next generation of AI? The solution will inevitably involve deploying customizable computing targeted at specific language models, along with exceptionally fast connectivity. Now, on this slide, we detail how enabling hyperscalers to deliver new AI-powered data centers at larger and grander scales. Bandwidth impacts every aspect of data center, and the nature of hyperscalers is evolving to accommodate growth. Hyperscalers like Microsoft and Google are investing between 4 to 10 billion solely in GPUs to enhance their data centers. We're now entering a new arms race with these companies developing custom silicon tailored for specific data sets and language models. This shift means merely having cutting-edge connectivity as silicon IP is no longer sufficient. Advanced technologies such as PCI Express 7, CXL 3.0, Coherent Light, PAM4, UCA, and HBM are essential. To meet their needs, they require not only innovative IP, but also custom silicon that can take them from specifications to actual components. This leads to the use of chiplets, which enables them to build large-scale system on chips more rapidly while allocating more space for connectivity. Alphawave Semi offers a complete and comprehensive silicon stack that enables hyperscalers to enhance connectivity at all levels, from chiplet to chiplet, from processor to processor, server to server, and ultimately from data center to data center. On to the next slide. When it comes to providing custom silicon for AI data centers, we can leverage our comprehensive portfolio of intellectual property. This capability spans a variety of processes and protocols. Additionally, we have established strong partnerships, which we will discuss in more detail later. These collaborations allow us to implement designs not only in system, on chips, but also in chiplets, utilizing the latest and most advanced packaging technologies. Next slide. To provide an understanding of the comprehensive nature of our solution for data centers, this diagram illustrates the various functions that must be integrated for AI training and inference. In this diagram, you can see the XPUs, the CPUs, the TPUs, and the network ICs, along with the switches and the storage components. Focusing on the connectivity that brings all these elements together, we can outline the following. First, front-end networking for training data and user prompts requires Ethernet. Secondly, back-end networks for scale-out utilize Ethernet, but is transitioning to a new protocol entitled UEC. Back-end networks for scale-up, which is the connectivity between XPUs, involves PCI Express or custom solutions, but it too is also evolving into a new protocol that's now entitled UA-Link. Finally, peripheral connections will continue to use the newest and fastest standards of PCI Express or CXL. In addition to connectivity IP, Alphawave Semi provides custom silicon tailored for all silicon deployed in data centers. This includes technologies for XPUs, ARM-based CPUs, network ICs, as well as DPUs for both front-end and back-end network integration. It's important to note that next-generation ASICs are disaggregating connectivity and compute element into discrete chiplets. This is where companies will look to Alphawave Semi to develop their custom chiplets. Next, let's look at how connectivity products we announced at March of this year are driving our business. Our connectivity products are a key focus and investment area for us. Let's look into the recent product launch. We announced optical digital signal processors designed to tackle the challenges of optical data transmission within and across data center campuses. As mentioned earlier, the rise of hyperscale campuses and distributed processing has increased the demand for data transmission over longer distances and using higher bandwidths. To meet these requirements, data centers must implement advanced modulation schemes, particularly PAM4 and now coherent light technologies. We launched our DSPs in March, and they support bandwidths of up to 1.6 terabits per second. Additionally, they can transmit data over optical connections spanning distances of up to 20 kilometers. The market for this technology is projected to reach 4 billion by 2028. Alphawave is uniquely positioned to capitalize on this opportunity as we combine extensive in-house expertise with a broad range of intellectual property, from optics to high-precision analog design, along with leading-edge manufacturing processes. This enables us to effectively bring these innovations to market. Next, let's look at how the size of the markets we address are growing and the drivers behind that growth. We anticipate that our total addressable market will reach 40 billion by 2027. What is driving this? The increase is primarily attributed to the expansion of the custom chiplet market, as well as connectivity products, as chiplet architectures and optics are both increasingly being adopted for high-performance computing and network infrastructures. Additionally, the growth of the custom silicon market is significant, primarily being driven by the rising demand for specialized AI hardware. This includes high-performance connectivity products and intellectual IP, which both are essential for the scaling up of AI architectures. Over time, we expect our legacy silicon products to contribute less to our forward-looking revenue. They will be gradually replaced by new design wins we've secured in 2024 and beyond, which are expected to deliver higher margins and increasing revenues. Focus on AI and data center infrastructure. As evidence, we're already starting to generate revenue from chiplets and our connectivity products in 2024, and that will continue to scale through 2025. Next, let me walk you through our key industry partnerships that are helping us rapidly scale our semiconductor business. One of the key ways we achieve our goals is through ecosystems and partnerships. Our industrial presence is significantly larger than our current financial footprint, which illustrates and helps drive our strong bookings trajectory. We formed close partnerships with many of the largest players in the ecosystem and announced an innovative approach with Siemens to greatly expand the reach of our intellectual property. In December, we signed that deal with Siemens, which we ultimately announced in February, which provides us access to a vast sales platform. Additionally, we are a leading player in developing industry standards and actively participate in defining how connectivity will be managed at both the chiplet, server, as well as the data center levels. Next, let me wrap up by summarizing our accomplishments in 2024 and my perspective and views on 2025 and beyond. Alphawave Semi is at the forefront of the AI revolution. How did we get there? We achieved this by delivering the world's highest performance connectivity IPs and productizing them into custom silicon, as well as creating the fastest connectivity products in the world. We are now a semiconductor company and are deploying these innovations in a suite of chiplets, which will further accelerate Moore's Law and enhance the deployment of AI across our data centers. We're accomplishing this through strategic partnerships, such as our collaboration with Siemens, and through disciplined investment in research and development. This approach will enable us to provide high-margin business opportunities and premium products for our shareholders. Ultimately, our mission is to drive the AI revolution forward. With that, I will now hand it off to Rahul Mathur, our Chief Operating Officer and Chief Financial Officer, to review our financial results for 2025. Rahul?
Thank you, Tony. While 2024 revenue was comparable to what we reported in 2023, we've seen significant growth in our core semiconductor business and continued to make investments to become the leading semiconductor company in wired connectivity and compute technologies for AI and digital infrastructure markets. Let me walk you through our financials for 2024. Let's start with slide 19. I'll start with an overview of our bookings and revenue trajectory. We had record bookings in 2024 of $515.5 million, up 34% year on year. 90% of these bookings came from IP licensing and advanced node custom silicon NRE contracts with North American, European, and APAC non-China customers. Excluding the licensing arrangement we signed with WiseWave in FY 2021, we've demonstrated spectacular CAGRs for license and NRE and silicon and royalties. Our 2024 revenue of $307.6 million was in line with our revised guidance. In 2024, we transitioned to higher margin IP and custom silicon engagements at advanced nodes. We also delivered first revenue for our connectivity products in 2024, as expected. Excluding legacy OpenFive and WiseWave, revenue was up 82% year over year, and excluding China, revenue was up 93% year over year. We also grew our core license and NRE business 54% year over year. Excluding the legacy OpenFive business, silicon and royalties was roughly flat year over year, as we do not expect to see silicon ramp from 2024 tapeouts until 2025 or later. Our bookings trajectory supports our long-term revenue growth and continues to outpace our industry. And the agreement we signed with Siemens in 2024 improves our confidence in our ability to grow faster than the industry. Let's go to slide 20. As Tony mentioned earlier, we ended the year with $520 million of backlog, 47% higher than the prior year. Over the past year, we've systematically improved our internal processes and forecasting ability. And let me discuss now some of the trends between bookings, revenue, and backlog. We report both licensing and NRE revenue, as well as silicon and royalty revenue. As revenue is a trailing indicator of our business performance, I think it's important to look at bookings, backlog, and revenue together. As I mentioned, through OpenFive, we acquired a substantial amount of lower margin custom silicon backlog that we shipped out in the first half of 2023. This is why our silicon and royalty revenues are approximately $100 million below what we saw last year, as we expected. On the bottom half of this chart is more detail on how accounting works over the course of the product lifecycle. When we recognize bookings and receive cash can be very different from when we recognize revenue, and this can also vary depending on this type of business. We typically do a design start after we receive an order from a customer. In many cases, we receive a portion of cash upfront associated with that order. Over the next 12 to 18 months, we will then recognize NRE revenue over the development period. When we have a design that combines our IP and ASIC capabilities, we recognize revenue on a percentage of completion basis. In these cases, the cost of the mask tends to be substantially higher than the cost of the development work. Because of this, the majority of revenue recognized is linked to the timing of the tapeout, even though much of our development work is already concluded. A change in tapeout timing from month to month or year to year can have a substantial impact on our revenue forecast. Our revenue trajectory over 2024 reflects the timing of tapeouts in 2024 for key customer projects. One thing to note is that of the $520 million of backlog at the end of the year, does not include a substantial portion of production revenue expected out in the future. And our silicon revenue is recorded as revenue on a transaction basis, like typical semiconductor product revenue. Of our ending silicon backlog, we expect to ship approximately 2/3 in 2026 related to the timing of a specific customer program. Let's go to slide 21. I'd now like to discuss our P&L for the year. Our reported revenue reflects the trends I discussed earlier. Gross margin in 2024 was 59%, up from 51% in 2023, reflecting the strength of our core business versus the contracts we inherited through the acquisition of OpenFive, where gross margins were below our targets. We expect our gross margins to stay in the low to mid-50s range through 2025, depending on the timing of silicon shipments. In general, our silicon IP business is almost 100% gross margin, whereas our custom silicon and chiplets products should generate 30 to 40% gross margin. We expect our connectivity products to generate 50 to 60% gross margins once they begin to scale. Our financials also demonstrate continued investment in R&D. It is critical for our company to make these R&D investments to meet customer roadmaps into the future. Adjusted EBITDA margin of 17% in 2024 reflects our investment in standard products, which had first revenue again this year. We recorded $91 million of revenue in the first half of 2024, and our full year revenue implies $217 million of revenue in the second half. Our updated numbers also imply approximately $64 million of adjusted EBITDA for the second half, so approximately 30% adjusted EBITDA in the second half, as Tony mentioned. This supports our long-term targets of 35% or higher adjusted EBITDA as we begin to scale. Let's go to slide 22. Here's some more information about our R&D investment in our employee footprint. We have design centers in Canada, as well as in Israel, India, and in California. We continue to invest in industry-leading design teams that are focused on continuing to extend our technology leadership in the critical areas of connectivity and compute. We capitalized $75 million of internal development costs for future products in 2024, and I expect to continue to have $50 to $60 million of cash R&D expenses to be capitalized each year for the coming years. We're on track to again grow headcount by about 10% this year, as we've anticipated. On slide 23, I'll discuss our balance sheet and cash flows. As the slide indicates, this is a key priority for us as a company, and certainly as a finance organization. We're focused on ensuring we have the capital available to fund investment in the products that are going to change our lives going into the future. From a cash perspective, we ended the year with $180 million of cash, in line with our expectations, as the $150 million of convertible debt that we closed in December was offset by our continued investment in mask sets for our silicon products businesses. Our sustained focus on working capital improvements allows us to continue making investments and bridge through this transition period before we see growth in these standard products. Net of taxes, we generated $13.5 million of cash from operations, and we remain focused on working capital. We continue to expect to see CapEx of roughly 10% of revenue and expect to capitalize $50 to $60 million of R&D each year. Now, let me conclude with the same summary slide Tony presented earlier. Whilst we remain mindful of the challenging global macro and geopolitical environment, we continue to lay and build on our foundations in order to deliver growth in all four areas of our business: IP licensing, custom silicon, connectivity products, and chiplets. In 2025, we will complete our business integration and expect to start delivering silicon for AI and data centers. We're executing on our strategy and remain excited about the growth potential of our business. Due to current global economic uncertainty and the rapidly developing nature of the recently imposed tariff regimes, we are not in a position to provide guidance for full year 2025 or beyond at this point in the financial year. While timing of customer programs is currently uncertain, we remain optimistic about the future growth opportunities in the business and will manage investments carefully through this period. High-speed connectivity IP is the DNA of our business, and we've been recognized by the world's largest foundries as the premier leader in this space. Most importantly, we're building on these strengths to deliver long-term value for our shareholders and other stakeholders. Before we get started with Q&A, I'd like to say again that we won't be commenting on the announcement released by Qualcomm on April 1st, or anything connected with any possible M&A activity involving the company. Under the UK Takeover Code, which we are subject to, our communications with investors, analysts, and the broader market are heavily regulated. If it's appropriate for us to share updates, we will do so via a stock exchange release. With that, I'll turn it back to Graham for your questions.
Tony and Rahul, thank you very, very much indeed. Can I ask anyone for any questions? Please, can I ask you to use the raise a hand function or the Q&A function at the bottom, and I will introduce you in an orderly manner. So please feel free to use the raise a hand function for any questions. Gareth Hughes, you have the first question. Gareth, you're on. There we go.
Yeah, I was just unmuting. What, if any, changes are there to your strategy following the tariff tsunami that we've seen over the last month or so?
Hi, Gareth. Look, great question. Certainly, it's been a rapid series of events over the last several weeks in terms of tariffs being deployed by the US across the world, and other nations retaliating. The focus for our business over the last few years has been hyperscalers, and they're predominantly located in the US. And so our results this year illustrate that. The growth outside of China, approaching 100%, documented. And so, look, inevitably, to be on the leading edge of technology, we need to service American hyperscalers. And so we continue to focus on that and focus on prioritizing our business in the US. So we don't export much to China, and so our exposure there continues to diminish as we progress our business.
But obviously, the US is critical. Does that alter your route to market, or can your margins absorb the tariffs?
Yeah, Gareth, it's not clear how tariffs will be subject to our products. Our products are predominantly from both TSMC and Samsung, with the announcements in the US by TSMC launching the joint venture with Intel. They're equally as committed to the US as is Samsung, who I believe are launching their next generation manufacturing in the US, not even in Korea. And so again, as these tariffs continue to get deployed, it's not clear to us, nor our advisors, how semiconductors will be impacted right now.
Thank you.
Can I ask any more for any more? We've got Juan Jimenez. You have a question.
Yes, hi, good morning, guys. I wanted to touch a bit on the guidance that you gave before. I understand you're not providing any guidance, but if my memory doesn't fail me, for 2025, you had initially expected 500 million in revenues, and then you lowered down that to 450. I wonder whether the environment that you're seeing right now suggests that you are predicting at least an increase in revenue this year, or not. Thank you.
So, one, thank you very much for the question. As we've talked about, and as Tony just discussed regarding the changes with tariffs and geopolitics, it's difficult for us to have visibility. I think it's unusual to be in the situation that we're all finding ourselves, and I don't think this is just an Alphawave specific situation. I would still expect some growth in 2025. It's just difficult to predict what's going to happen from timing, particularly of silicon shipments. So there have been historical numbers that we've talked about. I think if you look at the most recent analyst projections, they would be even further muted from what we've seen in the past. But right now, we're just not simply in a position to guide for 2025. When I look at our backlog continues to be very strong. So when I think about it, we ended last year with about 520 million of backlog. And as I said earlier, about 80 million of that is for silicon shipments that are now scheduled for 26 and beyond. So if you take that out, then what you get is something in the 440 range. And typically that backlog then goes out over 12 to 18 months. And so that gives you a bit of indication of how much would happen in the next 12 months and how much would happen in the next 18 months. And the real swing factor has always been silicon. It's been not just the silicon shipments for all the tape outs that we had in the back half of 2024, but also the timing of the ramps for our own standard products, both for chiplets as well as connectivity products. And on those, we're working very closely with our partners in terms of their cycles. And what we're doing is going through qualifications for connectivity products, for example, in the first half of this year, and then with our key first hyperscaler partner, starting kind of in Q3. So depending on timing of those qualifications, timing of ramps, that will really determine what happens from a silicon perspective. And because of what we're seeing just from a geopolitical perspective, it's really hard for us to predict.
Thank you. Thank you, guys.
Helmut Barsch, you have a question.
Yeah, hi. Thank you. Good morning. Thanks for taking my question. I have a question on the ramp up of the optical transceiver products. Could you comment on that a little bit? And it seems to me that it is a little bit slower than expected. And maybe I'm wrong, yeah, and you can correct that view. And how does the competitive landscape develop and the adoption of the 1.6 technology in the optical transceiver business behaving? Thank you very much.
Hi, Helmut. Thank you for the question. So first off, our ramp on our optoelectronics products are right on target. We guided that we would receive first revenues for them in 2024, which as of today, I can happily announce we did accomplish that. We are on target in terms of completing qualification with the world's leading optical module makers for both PAM4 as well as our coherent products. I'm also happy to announce that we're within the qualification cycle of having those optical modules qualified at leading hyperscalers. And notice I say plural. And so combined, we are on track to launch not only our first generation, which target 800 gig for PAM4 and 400 gig on coherent, as well as 800 gig on coherent, but also, well along our production life cycle at 1.6 terabit, as you referenced, Helmut. And so we're seeing the industry not only deploying 800 gig en masse, but very rapidly moving to 1.6 terabit. Certainly also design starts are looking to begin this year on the next generation at 3.2 terabit. So the pace of innovation, the pace of deployment of connectivity is moving faster today than it ever has. And what is driving that? It goes back to something I mentioned during my presentation today, which is connectivity is scaling at half the rate of compute. And so that's causing data to be wasted on our networks more than half the time for some of the large language models that are being used today. And so the industry is thirsting for more bandwidth, and that's what's causing the fastest pace of connectivity expansion and growth that I've ever seen over what is now approaching almost 30 years within this industry.
Okay. Can I ask a follow-up? What is here then, once you pass the qualification process, and what do you then what is being considered as a leading edge of the product? Is this the total cost of ownership? Is it the power consumption? It's the bandwidth? Or what is considered as a leading edge in your opinion? Yeah, and what brings you on the table in contrast to other competitors?
Yeah, I understand your question, and it's a great question. It's one that we get regularly from investors. I think the way we best differentiate ourselves, obviously, you got to have the capability, the performance, the power, the cost. But truly, the way I believe we uniquely differentiate ourselves is, as of today, we have more than 80 active engagements incorporating our high-speed connectivity solutions. And that spans IP, that spans custom silicon, and now that spans our connectivity products. I would hazard a guess that each of our competitors, right, and you know who they are, whether it's a Broadcom or a Marvell or a Credo or an Astera, even the largest of them, as of today, probably is not engaged in more than, I don't know, 1 or 2 dozen active engagements. And active engagements being from design start to a product just about to enter production. Okay. And so what does that mean? That means we have the widest deployment in the world of high-speed connectivity, more so than anyone else. This is illustrated by the fact that we won the TSMC High Speed Connectivity Provider of the Year award the last 5 years in a row. We're listed as one of the top 3 largest semiconductor IP providers in the world outside of ARM, because we don't play in the compute space. And again, that's driven by our high-speed connectivity. And so the breadth, the span of our technology deployment makes us the default choice. And that is why we're winning today on the product side. Okay, we are the robust default choice, just given the breadth of our deployment.
Okay, thank you.
Thank you, Helmut.
Rob Sanders, you have a question.
Hello, can you hear me?
Yes,
Hey,
Rob.
Rob.
Hi there. Yeah, I just looking back on 24. Can you just break out data center versus non-data center in your revenue? Historically, you did have quite a lot of business in mobile infrastructure, in automotive, and the broader networking space outside of the data center. So I'd just be interested if you could just break out inside data center versus other. Thanks.
Sure. Rob, I don't have a specific number at hand, but I would hazard a guess that in 24 and 25, the vast majority is in data center. We've flushed out most of the legacy silicon that was outside of data center. Certainly, all of the bookings that we're announcing these days, it is virtually all in data center. And for me, virtually all would be 85% plus data center. So that is our focus. I expect over the next few years for that to continue to be our focus. Even the telecom guys and the base station guys where we win, it's not in the antennas, but it's in the data centers that now drive their businesses as well, right? That's where all of the data is getting processed and routed. And so that is our focus. It's those wins from 2020, late 2022 and 2023 that drove the explosive revenue growth in the second half of last year and helped drive up our EBITDA to north of 30% in the second half of 24 as well.
And the other question just be if you could just run through, since obviously NVIDIA CPO launched in March, can you just talk about how that's changed your visibility and outlook and engagement with some of those AI accelerator opportunities? Thank you.
Thanks, Rob. Yeah, you know what? It is amazing how much I'm talking about CPO. And for investors that don't know that acronym, that's co-packaged optics. And so that brings optics that was once at the front panel display into the semiconductor. And so NVIDIA announced a switch that integrates optics specifically for their AI solutions. It reduces power, brings more bandwidth, reduces cost too, because it eliminates a lot of costly components on the server. And so what have we done at Alphawave? Look, that transition is seamless for us because not only do we sell connectivity products that go into the traditional modules that sit on the server, but we announced, I think it was 2 years ago, a chiplet strategy that we updated a year ago at our Capital Markets Day that delivers connectivity chiplets that are co-packaged. And one of those connectivity chiplets that we announced a year ago at our Capital Markets Day was specifically for co-packaged optics. And what does this mean for us? It means at the recent optical networking conference called OFC, we had several exciting announcements with several players in the co-packaged optics space. One of the bigger attended announcements was with a company called Light Matter that showcased our optical chiplet with their silicon photonics to bring to the industry bandwidths today that are on the order of 10 times more than what NVIDIA announced, and with a line of sight on a 3D co-packaging solution that could bring north of 256 terabits of I/O bandwidth to future processors in data centers. It's exceedingly exciting technology. The technology decreases connectivity power consumption by more than a factor of 10 than what's consuming today. And it's inevitably the way that AI and data center silicon will have to communicate to each other just to try to maintain power consumption while delivering the increased bandwidths that processors will need.
Thanks for that. If I could just squeeze in one about, I've had a few skeptical inbounds today from investors basically saying, what has tariffs got to do with an IP company in terms of you withdrawing your guidance? So what, help us understand for investors.
Yeah, so let me lead that one, and then I'm sure Rahul might have a few comments to add on. Look, we went public as an IP company, but for anyone following us today, I'm sure they recognize we're now a semiconductor company. The majority of the wins, the majority of the revenue, the majority of the bookings coming in are on the custom silicon side and more on the product side. And so we rebranded ourselves from Alphawave IP to Alphawave Semiconductor, I think going back in 2022. And certainly the announcements that we've made since, the reporting that we've issued since, highlight this transformation into a semiconductor company. And so as with all the other semiconductor companies that leverage the full supply chain, that sell products into the US and internationally, those are the pressures that we're facing, and that's why we see enhanced uncertainty and are unable to provide an update to our historical guidance right now. Certainly, we intend, as we see, hopefully, in international politics and trading regimes settle down. As our certainty increases, we would look to provide enhanced visibility to investors, as we historically have.
Rob, let me add some more information because I understand your feedback. Fundamentally, tariffs work on physical products, and IP is not a physical product. But if you look at our backlog and growth trajectory, I think it will give you a little more information that helps understand why we're not in a position to provide guidance. We ended last year with 520 million of backlog. Out of that, just under 400, 392 was for IP and NRE, licensed NRE, and there was about 128 for silicon and royalties. As I mentioned, out of the 128 for silicon royalties, there's about 80 million or so that's associated with an order that won't ship probably until starting in 2026 with one of our key customers. So that gives you an idea of how much backlog we're coming into the year for and kind of how much silicon and royalty revenue you could see for us in 2024. From a license and NRE perspective, again, that ending backlog usually gets recognized over about 18 months, right? And so you kind of get an idea of how much of that backlog could be recognized for revenue for us in 2025. Now, of course, that's going to be determined simply by timing of customer programs. What we're doing is the very hardest thing to do in electrical engineering, right? The design wins that we're working on now at 5432 nanometers are equivalent to what your fingernails have grown through the course of my lengthy answer, right? These are just the hardest things to do in all of science. And so because of that, it takes time, right? And so the timing of the programs impacts not just us, but our partners and the entire ecosystem in terms of what's there. Now, from a guidance perspective for 2025, the growth that we'd expected to see in our company comes from silicon, right? It comes from our own silicon products in terms of the standard product, either for connectivity products or for chiplets. And that's going to determine on connectivity products the timelines of the qualifications that Tony talked about. But even if, as of today, if semiconductors are not subject to tariffs, it doesn't mean the downstream electronics that they go into won't be or aren't. And that's what creates a lot of pause and uncertainty in terms of what's there. And so I think that's why you see a lot of variability in terms of what could be in the market and why we're not in a position to provide guidance. We have good visibility in terms of the silicon backlog that we ended in 2024, and I gave you some indication of how much of that might ship in 25. We have reasonable visibility in the license and NRE backlog. Of course, that's going to determine based on just timing of customer tapeouts, and you saw that in our trajectory in 2024. But the growth that we expect to see for our company coming out in the future years is really related to that timing of growth in chiplets and connectivity products, as well as silicon that starts to ship from the tapeouts that we've had from historical products. And that's just difficult for us to predict what the timing and scale is going to be at this point in the financial year. So hopefully that's a lot of information that gives you a little more context behind where we are today.
Thank you.
Thanks,
last question or two is Harshita Bhatia. You have a question.
Hi there. Can you guys hear me?
Yes.
Oh, perfect. So I had two questions. The first one is just given this uncertainty around the recognition of revenues, to balance kind of managing your cash flow and current liquidity. I see you guys had around 180 million of cash after the CB. So how much CapEx kind of room do you have in terms of necessary versus some discretionary CapEx? Just to give us an idea of kind of what that cash balance could look like through the year. I see there was around 90 million this year, and you're speaking around 50 to 60 million cash R&D spend. So just a range on how much that could vary throughout the year would be my first question.
Sure, Harshita, and that's a great question. I think what I talked about in prepared remarks is that you'd continue to see CapEx in the 10% of revenue range for 2025, and so we'll monitor that just based on how the year goes. There's another 50 to 60 million of R&D expenses that I expect to capitalize over the course of the year, and that's revenue for future products. So that total amount for the year should be somewhat similar to what you saw for 2024. Of course, it's going to be driven by the timing of customer programs and where we are in terms of particularly the standard products and where our partners are for the connectivity products, as well as where we are from a chiplet perspective. But I'm very confident that we now have the balance sheet we need to go support our growth. You saw that with the results that we had in 2024. We did the convertible debt in December to really de-risk our growth opportunities. And so we last year printed 17% adjusted EBITDA, but if you look at the back half of the year, it was about 30%, right? So certainly we see continued growth and improvements in terms of revenue and profitability over the course of the coming years. We just have a little lack of visibility at this point in time, but I think we have the balance sheet and cash on hand to support that. And we'll certainly continue to be prudent in terms of our investments. What's critical for me is to continue to make those investments in R&D in order to make sure that our customers understand that we are supporting their roadmaps. I think that's critical for not just this generation, but the next generation of products as well.
And Harshita, I want to iterate to you and to the rest of the investors on the call. Our performance in the second half in terms of delivering 217 million in revenue and 30% EBITDA, and our growth outside of China exceeding 90%, bolsters my confidence in the plan, in the strategy that we've outlined and the guidance we've outlined in previous years, and makes me exceedingly confident in our ability to continue to drive this growth moving forward.
Great. Thanks, guys. And just on that, you explained really helpfully around the backlog and revenue cycle. I understand that the quarterly updates on backlog don't include any debookings. Is that what we can expect for this coming year as well? So it would only be the annual results that reflect any debookings in your order book and backlog?
Harsha, that's right. When we announce our quarterly trading update, we provide new bookings, and then we take any adjustments as adjustments to backlog, and we report that at the half year and the full year as well. What you would have seen in our annual report is it's typically about 8 to 10% in terms of what we see from a booking perspective. And usually these are just changes in customer roadmap timing. It's not a change in terms of loss of business. It's just that roadmaps continue to evolve with our partners. We were impacted from a revenue perspective last year, and this impacted our first half 24 results because two of our partners merged. That's an unusual circumstance, and because of the nature of revenue recognition, it's difficult for us to recover that revenue in a given period. And so that was part of the change in guidance that you saw for us last year. But we'll continue our practice in reporting bookings every quarter, and then we'll show you backlog at the half year and full year so you can see those trends.
Great, that's super helpful, guys. And just one last question would be, whilst you can't comment on Qualcomm, would you be able to comment on ARM at all and the reason perhaps behind declining to bid, be it price mismatch?
Yeah, the only thing I can say about ARM is great processor technology. Beyond that, yeah, we can't comment on anything of that nature right now. It's just yeah, it's just not appropriate, and we're not able to, given the policies of the UK takeover code.
No problem. Thanks, guys.
We have one question that's come through the Q&A, which is from Marvin Wenzeski. How do you see the recent developments in CPO impacting your optical DSP and transceiver business in the medium term?
Yeah, great question, Graham. Look, I don't see traditional optical modules going anywhere. Market forecast companies like Light Counting, which closely track the space and have decades of experience tracking the space, show continued growth year on year. There is going to be transitions within that space from PAM4 and silicon photonics at 1.6T, as well as traditional EMLs, transitioning over to newer forms of technologies. I'll give you an example. At 3.2T, it may not be PAM4, okay? It may be other forms of modulation, and you'll see rising growth of coherent light to drive distances within data centers. But CPO is also going to be growing. And as we mentioned, for every one wire that was in traditional networks, thanks to AI, it's now expanded to 3 to 4 wires. And so more of those wires are going optics, and a portion of those wires are going to co-packaged optics. And for us, look, we win with the traditional optical modules, and now we will also be winning with the move to co-packaged optics. And so we're relatively agnostic in terms of how these technologies continue to deploy within data centers. And we'll continue to work very closely with our hyperscaler customers to make sure we have the technologies they need and the time frame they need it in, and at the power consumption that allows them to deploy en masse.
Marvelous, and exactly to time. So, Tony, Rahul, thank you very much for a very comprehensive presentation and Q&A session. And thank you to all those who've put their questions through. If anybody has any more questions at all, please send through to ir@awavesemi.com. And to that end, thank you very much. And yeah, any questions, please come through to us. Many thanks indeed.
Thank you, everyone. Thank you.
Bye-bye.